Hello everyone and welcome to our next technical analysis review for the Euro US dollar pair. Today is May 30th, 2012 and we are currently looking at price action on our 10-minute chart. And as you can see, ever since today's open around the Asian trading session, we've been in risk aversion. Risk aversion has been in high gear as investors begin to further pile into the greenback on concerns coming out of Europe. And of course, there's still some concerns over the Spanish bank. There's still Spanish banking worries and the threat of a Greek exit that's also weighing heavily upon market sentiment. But we also had an Italian 10-year bond auction that failed to reach the upper limits of its targeted range. Primarily over concerns dealing with the sovereign debt issues in the Eurozone periphery and the threat of contagion. So this caused, borrowing costs to rise above 6% in Italian paper. So throughout the trading day, negative headlines began to weigh on the common currency, and the pair had fallen 143 pips from a session high here at about 25.05 down to the session low at 23.62 for about 143 pips. So the market was extremely bearish leading up to the close, and we are now awaiting the breakout during the Asian session. So since the pair is already heavily oversold for the day, we may see a correction or retracement to the upside, possibly around 24.20, where our SMA 100 line is currently at. We may see a correction or retracement to the upside, or we may see a negative handover into the Asian trading session and further selling in the pair. So with that being said, if I was looking for an opportunity to enter a trade or sell on a pullback to resistance on today, then I would have done so when price had retraced back up to this descending trend line resistance, which at the time was at 24.66. But it was not only the trend line resistance, it was also where our 100 SMA line was located as well. So this area of confluence around our descending trend line resistance and our 100 SMA line served as good dynamic support. And if you look to the left on a few occasions, you can see, for instance here, that we see a similar scenario earlier where price had hit this descending trend line resistance, and it was not only where our descending trend line was, but also where our 100 SMA was. And as a result, we saw price fall sharply from that level, and we could see the same thing happening here a few minutes prior to where our trade entry would have been placed. So then it's kind of safe to expect we see a similar response when price hits this area of resistance or this area of confluence. So with that being said, if I was in front of my platform at this time, then I would have placed a sell order around 24.60 upon bearish confirmation, and I would have placed my stop loss order on the other side, a few pips above this resistance here at around 24.74. And then I would have took this trade and took my profit when price had reached this 2400 psychological support, which was also where my weekly S1 support level was located. So then this trade entry here would have resulted in a 60 pip gain. So then, of course, this was one trade entry that you could have placed in the pair for today, going short the sell order. So, of course, throughout the day, the pair began to slide further, and of course, it eventually broke this 2400 psychological barrier. And it also broke additional supports at 24.85, and it continued to slide further. And right now, price is consolidating ahead of the Asian open. It found support here at 23.60, that area, and is now consolidating above this area of support, and we're awaiting the breakout in the Asian session. So just like I mentioned earlier, that there's still a possibility of a correction in the pair. We may see a short squeeze rally to the upside near 24.20, where our 100 SMA line is currently located, or we may see a continuation of the bearish momentum into the Asian trading session. But that's it for my technical analysis review for today, and I will be talking to you guys later. You guys have a wonderful day. Okay, then, bye.